Hey, good morning, everybody. It's Hammer. Today is Friday, January 17th, 2025. I, of course, am here with the Daily Mortgage Rate Update, the only place on the web where you can watch me feel like I'm going to sneeze. Bear with me a minute. I'll be right back. What an uncomfortable feeling. Sorry about that. Anyway, the only place on the web where you can join me live each and every day, 9:30 a.m. Eastern Time on Facebook and on YouTube, coming to you live. If you're watching on the replay, I know many of you do. Don't forget, just in the comments, do me a favor. Go ahead and put hashtag replay. Also, don't forget, if you are on Facebook, give us a thumbs up, maybe tag an LO, possibly click the share button on the post. If you're on YouTube, go ahead and subscribe. Click that thumbs up as well. Excuse me, got a hiccup. Let's go ahead and say hi to the live folks on this morning. Good morning, Ms. Allison Foy. Hope you are doing well. Good morning, Bobby Searson. Great to see you. And good morning, Mallory Fotiadis, Julie Lawrence. Now, I'm going to tell you, it's no coincidence. The first 4 people on saying hello were all women. They're just much more punctual than men. That's the reality, y'all. We have to own it. So we, got to give it to y'all. Good morning, Sherry Keeter. We got Tim Klyla. There we go. Tim representing the men for us. Thanks, man. We got Megan Lindberg, Monica Dinkins. Good to see you, Alan Christian. Good morning, Sunshine. How is Atlanta these days, or the Atlanta suburbs? How is Roswell, Georgia? Mandy Kangas, good morning. Kenny Rivard, great to see you. And yeah, TGIF. However, we're ending the week on a bit of a good note. Good morning, Carly. Hope you are doing well also. So, all right, my friends, let's go ahead and jump right in. I'll tell you what's going on this morning. Bonds got an unexpected boost yesterday from Waller. Let's go ahead and share the screen. We'll go over that. Good morning, Ron Siegel. He said today is National Hot Buttered Rum Day. Today is National Hot Buttered Rum Day. By the way, before we get into the charts, then who likes buttered rum? So there's the question of the day for you. Let's go ahead and throw it on there in the captions. Who likes buttered rum? I'm not a big buttered rum person. Who likes buttered rum? Like, buttered rum is a flavor, right? Like, ice cream and stuff like that. I don't know if they actually make like a real buttered rum, but who likes buttered rum? Let me know in the comments if you like buttered rum, and we'll have some fun and chat about it. So anyway, going back to what we got going on this morning, let's go ahead. Yeah, I'm with you, Bobby. Bobby said no thank you. I'm a no thank you as well. Now Mandy's all about it. She said buttered rum is so good. I don't know. Not my thing. So, all right. I wanted to show you all here. This is the 5-day chart. And in fact, let's go ahead and zoom in. Really want to make sure we can cover this. Let me refresh the page so I can scroll over and we will get to this chart. Take a look here. So if you take a look, you could see where we were at. Let's go ahead and take a look. You could see that we got a big improvement. Remember, we started the week. The 13th was on Monday, and it was quiet on that day. Tuesday was quiet. Wednesday, we got an uptick and a nice jump in bonds. You see that here. If you remember, that was due to the CPI inflation data coming in as expected, with the core readings coming in slightly better than expected. Now, yesterday morning, look here, we lost a little bit of ground. We recovered when the retail sales data came in a little bit weak, but we were kind of flat. And then right here at 11 a.m. Eastern time, you can see that mortgage-backed securities jumped up, and they kind of held those gains and even improved a little bit more through the day. All right. Now, why did we see that? That was due to Fed Governor Waller and his comments over here with CNBC. And what's funny, he was doing an interview on a show called Squawk on the Street, right? So he was just doing an interview here. And the crazy thing about this is that he doesn't even show up on my calendar, on the economic calendar, for like what we were looking for yesterday. He wasn't even on that. Like, that was a totally unexpected area to find improvement, and I'm really surprised. And Ron and I disagree on this one a little bit, so we'll talk a little bit more about it. But I'm going to pull this economic calendar over here and show you. If we take a look on Thursday, you could see we had jobless claims and continued claims. You had some export price data coming in. You had retail sales, which came out in the morning, and then we had some housing market data from National Association of Home Builders. There's business inventories, right? But you don't even see Waller on the economic calendar here. Normally, you'll see like Fed Goolsby's speech, Fed Barkin speech, Fed Kashkari speech. So when the Fed speakers are on there, and we've seen a pretty consistent message from the Fed members. So anyway, let me stay on track and then we'll go deeper on this. So rate sheets today should be better than yesterday. And generally, they're going to go ahead and match the best levels that we've seen this year. Let me pull this over so y'all can see what I see. Do you see what I see? So I'm going to slide this way the heck over like this and give us, man, it's hard to. Okay, and let's turn off all this other stuff. We're just going to keep the 30-year for now as a consistent. All right, so take a look here at this chart, and you'll see that we saw a very, very consistent uptick until right here. And then on Monday, we've seen, things were held steady Monday and Tuesday right here. And then on Wednesday, they dropped. And I'm going to see if I can't make this even. There you go. Look at that. Oh, we're almost there. Okay, perfect. So you could see that on Friday, we'd seen a really steady increase in rates, and then we've kind of crested right here, right? So Monday and Tuesday, we were holding, and I've been in a locking stance. I was afraid we were going to see another rebound. Now, Wednesday, we got the inflation data, and we got that relief rally, and that saw rates improve a little bit, about 1/8 of a point in actual rate, not just in pricing. Then yesterday, we dropped even further. And again, in the morning, if you take a look back and you look in the morning, oh, this is so annoying that I have to constantly refresh this chart so I can move anything. Let me go ahead and get rid of the economic data. Okay. Really? And now I have to refresh the damn thing again. All right, here we go. So if you take a look in the morning yesterday, you could see, I'm going to put this on a 2-day. Hold on a minute. And then I'll bump this up so you guys can see the bottom of it. Hold on. Okay, so look here, right? In the morning, we were actually down on the day. When you look in the 5-year, you could see that very clearly. We were down on the day. See this little valley? And then they actually, we were flat when the retail sales data came out. And I was in a lock stance yesterday because I expected to see this start to go back down. Instead, we saw that jump up. The reason we saw that jump up is because of what Waller said, right? He came out with comments and he said, as long as the data comes in good on inflation, continues on that path, I can certainly see rate cuts happening sooner than maybe the markets are pricing in. Asked how many that could entail, he responded, it's all going to be driven by the data. If we make a lot of progress, you could do more, which he said could mean 3 or 4, assuming quarter point cuts. If the data doesn't, and this part kind of got drowned out. If the data doesn't cooperate, then you're going to be back to 2 and going maybe even 1 if we just get a lot of sticky inflation. Now, again, we're seeing markets, we've seen a momentum shift. And that's why right now I'm going to go ahead and let me put it up on the bottom of the page. I'm at a very, very cautiously floating stance for now. I don't feel good about it, though. I don't regret being in a lock stance the last couple of days. Waller's comments had a very strong effect yesterday, though. And that's what I want to show you and what I want to kind of spend some time with. Take a look here. Expectations for Fed rate cuts January 29th, right? So the meeting in a couple of weeks, it's still at 99%. Now, remember, this is the compare chart where we compare today is the darkest blue. And then as it gets lighter, it's farther away. A month ago, there was about an 80% expectation and still a 15, 16% expectation that we would see a possibility of a rate cut in January. That has gone away down to none, 0, right? So, but when you look at March, Look what happened after Waller's comments. Now, Waller is an absolute, dove, but take a look here. A month ago, expectations that we would see a rate cut were much bigger. It was a 60% or a 50% expectation we'd see at least one cut. And there was an outlying about 8 or 9% probability that we would have seen 2 cuts by this meeting. That was a month ago. Now, when we go back a week ago, that had all changed. And this is what drove mortgage rates up, right? There was a 75% probability, 3 out of 4, that we were going to see rates stay exactly where they're at right now. Yesterday, that dropped to 66%. It went from 75 to 66, and we saw it increase on this column, which is the rate cut. So there was a 10% move that we could see a rate cut as soon as March. Now, today, you'll see that that's drifting back a little bit. See how the dark blue line has gone up from where yesterday's line was. We've lost that ground here. So we're seeing it give a little bit. Now, expectations for May, again, a month ago, we were much lower that we'd see that where we'd say we're at. A week ago, markets were pricing in the idea, hey, we're going to stay here. Now that's gone from 63 to 51%. Okay. By June, we've seen that go from a week ago, 45% down to 31%. So now when you look at this clearly, you could see that markets are now firmly pricing in a rate cut by June. And that's the big shift that we saw last week, this week. The 2 events that have brought us here were, number one, the fact that the CPI inflation data came in as expected, with the core data coming in slightly better than expected. Okay. If that reading had gone the other way, we'd be having a very different conversation. Number 2, Waller's comments, very dovish. I don't agree with them. Now, Siegel, he thinks it's happening. He thinks that stuff's coming. I think that the market's drinking the Kool-Aid. But remember, what this does do is it gives us very clear differentiation of momentum. We've seen, remember, yesterday when we looked at that chart, I said, hey, I think we're going to see things reverse and we're going to lose ground. Instead, we've broken above. Now, we were testing this 100.18 level here. We broke above that yesterday significantly, which really shows that there's some pent-up demand. Now, remember, markets are closed on Monday. So as far as reprice risk today, it's low. There's no economic data today. There's another housing report, but that's it. Momentum is on our side. Markets are closed on Monday. So generally, you're going to see money parked in bonds for the weekend, for the long holiday weekend. Not a huge amount. Again, we're only up 3 basis points, and we were up much more than that just a little while ago. We were at 100.56. That's 11 basis points higher. So we're seeing a pullback on this. So although I'm saying, all right, I'll give in to cautiously floating, it's very cautiously, and I could be late to the party. Timing this, knowing that Waller's comments were going to come out yesterday, totally unforeseeable that we were going to get that kind of reaction. Now what we're doing is, because of that reaction, it's changing my stance to how I think markets will continue to react on that. So I'll hit your data comment in a minute, Ron, as well. So, and then Ron pointed out something that's very relevant here, which is that Fed Governor Waller is in St. Louis, and St. Louis is in charge. That division of the Fed is in charge of research. He looks at the data, not the reports. So he's seeing more of the data. But the thing is he's not the only member, right? So the reports are a big deal. And yeah, it's conflicting data, very much conflicting data. Nathan Einkorn said 72 basis points is a little bit, which I don't know. I have to pay attention to when that came in. When I say a little bit better, if you want to talk about, to me, that's a little bit when you're looking at pricing or even rate, because I'm looking at bigger moves, Nathan. I'm looking at, we went from the worst level was 7.25, and we're at 7.07, which is just a hair better than 7 1/8. That's not you're talking an eighth in rate. On aggressive lenders, you may see a 0.25 point in rate, which to me is a little bit more, but that's probably best you're going to see. And that 7.07 is the best we've seen since December. I mean, when we crossed the line into January, we were at 7.07. We've seen things creeping up worse, and then now they fell back to that. So, but yeah, I mean, I don't see that as a big thing. So I say rate sheets will be better. Yesterday we did see reprices better. You know, I had that in my notes. I just didn't make a thing. The outlook, you know, rates are not likely to improve much. I think we see them, you know, kind of tick back next week. We're heading into the Fed meeting. There's no big data and no big events until we get to the Fed meeting. Tomorrow starts the Fed blackout period. I looked to my left, but I moved my calendar for today. Yes. So it's the Saturday before the Saturday of the meeting. So we are in the blackout period now. There'll be no more Fed comments. There's really no relevant data. Let's take a look and see what the let me see what the economic data calendar is for next week. I don't think it's anything really all that relevant. Let's see. So markets are closed on Monday. Tuesday, of course, Monday will be the inauguration day as well. Tuesday, you will see a bond auction. There's really nothing there. Wednesday, a bond auction, nothing else there. Thursday, you've got your regular jobless claims. Friday, we've got S&P Global Manufacturing and Services PMI data. So we've got some PMI data on Friday. So there's really not much happening. The question is, again, do you how much risk do you want to take? Could we see a little bit of further improvement from bonds at this level? And the answer is yes. They could improve a little bit more. We could see them where we tested these levels here, where they opened the day. Right, well, let's see what's here, 100.65. So we could be, you know, another 20 basis points, and we could be testing this level here of 100.65. You're also going to have the 50-day moving average at 100.65. So there's room. There's about 20 basis points of room for improvement in mortgage-backed securities before we have to question, are we going to see a bounce? That's the next technical resistance level, 100.65. It's where we've got the 50-day moving average. It's where we tested at the end of December as we were going into January. So that's what you got going on with that, my friends. I think I hit everything. Again, the outlook for the Fed is that we'll see cuts, and then by the end of the year, it's still, you know, that will get one cut, maybe two. So if this shifts in the other direction, rates will move higher, but you're not going to see a lot of data that's going to push for more Fed rate cuts. We have seen some relax as far as the tariff stuff goes. Let's see. Ron says pricing might go up around the end of the day. Markets will be cautious as we go into the long weekend. Traders will leave early. Yeah. So if you want to talk about rate sheets, but most lenders don't reprice late in the day on a holiday weekend. You'll just see it conservative pricing on the beginning. That's the other reason, Nathan, even though, you know, we ended on, what day was this? Wednesday at 100.24. We ended yesterday at 100.42. We're at about 100.45. So you're going to see some conservative pricing this morning, you know, as lenders protect themselves over the long weekend, and, you know, mainly on new loans though. So it's a little less. There's not a ton of volume right now, so there's less of that. I don't think you're going to have to worry about seeing pricing go up around the end of the day. I think I'm going to maintain my belief that I think reprice risk is low, Ron. I don't think you're going to see anything really move. We're only up a couple of basis points right now as far as mortgage-backed securities, and I don't think that's going to change much. And let's take a look at the 10-year Treasury yield real quick. 4.61. I think that can actually tick back down a little bit, but that's testing the 25-day moving average at 4.59. And then we could see that go all the way down to the 50-day moving average at 4.45. That would be the next level that you would expect to see. Kind of coincides with where we were, 4.41, 4.40. Yeah, so kind of that same thing. But all right, my friends. Well, that's it. What kind of plans do y'all have for this weekend? I'm going to finish working on the bookcase that I started last weekend. I just got to do some sanding and some painting on it and bring it upstairs. But What are y'all doing? I am curious. Let me know in the comments. Again, we can cautiously float for now. I'm not averse to locking in on these rates, though, just to warn you. I think there's a good chance that on Tuesday, we could see just a reaction. We're going to remember the rest of the world doesn't close for Monday. That's an American only holiday, observance of Martin Luther King Day. So we could see some more movement that would hurt us as we head into Tuesday. It's not a bad idea to lock, especially loans closing near term. We're not likely to see much big movement until we get that next Fed meeting on the 29th. So Jason Hanson, club volleyball tournament for your daughter. Well, good luck to her and may she stay healthy. It's funny. Winning and losing is, of course, important, but it's as I get older, it's you just want everybody to be healthy and injury free. Mallory's going for prepping for your son's birthday party. How old's your son going to be, Mallory? Which birthday is this? Mr. Frito Rivera, let's go. Good to see you, sir. Maybe an early morning celebration for the 9 a.m. Yeah, change in leadership. So I will not be doing a live on Monday, y'all. Market's closed. Of course, we do have the inauguration, but there's really not going to be anything to talk about from today. So I'm not going to be live on Monday. I'll send out a reminder, text that I'm not. If you'd like to sign up for reminders when I do go live, remember that you can sign up at hmmr.io/reminder or use this QR code down here. And where is it? Like right there. Should be pointing to it, like right there, right? And then if you'd like to sign up for our free lock advice, www.ratelockadvice.com. You can sign up for our text alerts at www.ratetextalerts.com. As always, I appreciate all of you here. Frito, don't sink our float boat, my friend. I'm hoping it goes well. But I appreciate all of you joining me. Thank you so much. I'll see you all on Tuesday. Remember, I'll see you on Tuesday.